Hi, it's Rory Sercombe from Own Money, and thanks so much for joining us again for Industry's Own, our little snapshot of what's happening through our business and more broadly around finance at the moment. So look, what we're finding at the moment across the businesses, I suppose from the home loan perspective, we're certainly finding that we've got some investors selling off some stuff in Victoria mainly, but there's certainly others and sometimes the same people picking up the slack and buying in other states. We're certainly finding that some stuff in Queensland, some WA, and also some South Australia is becoming more popular. I went up to Townsville last week to have a look at some property up there with Jamie Dow, who runs our property advisory business, and there's certainly some great opportunities there. We went over to Perth a few months ago to have a look there, and certainly South Australia and Adelaide is on our agenda to have a look there, where we're finding there's just some good opportunities around for our property investors. So we keep a very keen eye on areas. We want to actually go there and have a look ourselves and make sure that the areas that we're suggesting our clients buying are the right areas. So that's been exciting to do. We're certainly finding our clients are reaping the benefits of that. So that's keeping home loans and property quite busy. The other thing with in the home loans business, first home buyers. First home buyers are certainly coming back, which is great to see. A lot of their stock that we're finding the investors are selling is the same sort of stock that our first home buyers want to buy. So, and that's kind of right through the industry. We're finding that's the case. So that's great. The federal government scheme spot. So that's where the federal government being the guarantor for first home buyers is really popular. I think there's about 150,000 now scheme spots have been taken up. So that's a massive boost for first home buyers. And what it means is that a lot of the time where we might have tried to get a parental guarantee or a family guarantee, they're not always needed anymore. So it keeps the parents' titles free from a guarantee, which is, at the end of the day, it's a good thing. A family guarantee is great if you need it, but it's nice to not need it. So we're finding that a lot of people are taking those up, which is great. Our financial planning business keeping really busy doing workshops. They're on a range of different topics to give their clients and across Own Money's clients great value. Free week workshops they're running just to make sure that people are across the current issues and giving them help setting up their financial futures. So so we're running a lot of those. If any of you would like to run one for your clients, we've certainly got the content there to be able to roll those out really well. I know we're running one for our property team again, and our financial planning team just love them and love providing that value. So if you think that they can be of value to you, your team, your clients, would love to have a chat about that. Some other things going on at the moment. Obviously, rates is a massive, interest rates is a massive topic of conversation at the moment. It's so confusing at the moment to know where things are going. It's certainly so changeable. So it's going to be really interesting to watch what happens. I gave up a long time trying to predict where I thought interest rates were going, so we're obviously keenly watching this space. We're keenly watching what happens, and more importantly, the reaction of the market if rates go up, down, or hold. It's just going to be really interesting to see, and hopefully the market's not spooked too much, but we'll keep obviously our eye on that. We do have tax cuts coming up for a lot of people, which is going to increase some borrowing capacity. So people are really tight at the moment, trying to buy a property for the sort of property they want, and they're getting tied up around borrowing capacity, where we just can't get a lot of time. We just can't get people just what they want to buy a property. So this is going to loosen up a little bit. So, for example, if someone's on 100 grand, they might find they get about 20 grand extra to borrowing power after the tax cuts come through. Got 150 grand, maybe around $30,000. Obviously, they're just, as long as no other debts come into it or whatnot, just as an example, that's kind of what we're probably going to see. But by the same token, we've just had lenders just increase what their minimum requirements for just their general living expenses are, which has really clipped a lot of people's borrowing capacity lately. So, we find we have a win on one side and a negative on the other. But really, we have this conversation a lot with our clients. It doesn't really matter, or it's a secondary concern what a lender's willing to give a client. It's really about what a client is comfortable paying back, and that's kind of what we anchor back to all the time. But it's nice to have the ability to give a client what they want, and sometimes that's just not possible because of higher interest rates, higher cost of living. So, but again, we just got to play within the rules that we're given. But with their stage tax cuts, we're going to find that borrowing capacity is increased somewhat. Modest as it is, it will increase. So, and the other side we're seeing, which is not great to see, we are seeing a lot of people come to us just asking for financial help. People who have borrowed at very cheap interest rate environments and really starting to feel the pinch, and they're starting to run through those cash reserves that they once had. So we're certainly seeing a lot of that. We're trying to work with our clients to help them through until rates do come down. And as I said at the start, that's a moving beast, and who knows when that will be, but we're trying to manage our clients through that, and hopefully that's sooner rather than later. But what lenders are quite good at now, and they used to be absolutely horrible at it, but now they're not bad at giving some relief to borrowers who really need it. So they might pause payments for a while, or halve payments, or switch someone to interest only, but it's they really don't want to have to kick someone out of a house. They'd rather work through with a client, get them through some tricky periods, and then once rates come down, hopefully the borrowers can catch up on that. Biggest advice I've got for anyone is really just start the conversation early. Speak to your bank, speak to your mortgage broker. You've got to communicate. So if you do have some clients who might be feeling the pinch, get them having those conversations nice and early. But yeah, that's all I wanted to really touch on. It's interesting times. Thank you once again for taking the time to watch this. We'd love to help you and your clients. If you want to run some workshops, or if you want to have something discussed and in these, we'd love to hear from you. So please let us know. And until next time, thanks so much. Rory from Own Home Loans. Thanks.